We start off with an under-the-radar rally in the tech sector. Yes, the mega caps, the AI-focused semis have been stealing the spotlight of late, but there are some other pockets of strength that you may not have noticed. Check out the moves in software names like Datadog, Adobe, and Snowflake, all significantly higher today. Media names also on the move: Paramount, Netflix, Warner Brothers, Discovery, all well in the green. And the gig economy stocks on the go: Uber, DoorDash, and Lyft feeling the love. So what does this broadening out of the tech rally tell you about the market? Are you more hopeful, Dan Nathan? I ask sarcastically.
You know what's interesting? One thing, the gig ones are really interesting to me because I think those were models that were heavily debated. They saw the pull forward during the pandemic. They rose to crazy heights in 2020 into 2021. They were some of the first ones that started to sell off. And obviously, Uber is a little different. They had some different dynamics going on between rideshare and delivery. But if you look at Airbnb and if you look at Uber, that's going to report, I know we're going to talk about it later, those stocks are both $100 billion market cap companies right now. They've had massive rallies over the last few months, and they've gone from, probably decent market size to very large, if you think about it in the, just in the context of the NASDAQ 100. So those and how they react to their earnings and guidance, I think, are going to be really important. The valuations are kind of getting a little stretched up here. I do think it's interesting, though, if we look at the semis. And today, we had that Intel move. It was up 6.5% on Friday after its results and guidance. Gave half of that back today. And Taiwan Semi, which guided a few weeks ago, has also been kind of stuck in the mud a little bit. That's why I think that AMD report and guide is going to be really interesting. But we have seen a rotation out of semis into these other names. And I think that is bullish if you're thinking about it is bullish. I'm not saying I'm bullish.
I heard that.
Bullish, right? No. But it is bullish. I mean, there's no way to say it otherwise.
No way to say it otherwise. Hi, Mel.
Oh, hi, Guy.
Tim looks great today. We were talking about that before the show.
His hair looks a little bit different, but equally good.
It's
really.
just, I'm just going to say it's a fresh shower, which doesn't mean I don't usually shower, but there's a lot of information for the folks at home.
It's wet, not gel. Okay, now we can move
Appreciate
on.
We got that out of the way.
So Snowflake is interesting, right? It's obviously rallied significantly from the lows that we saw. It was ridiculously overvalued at its peak. We talked about it. Dan mentioned it. Now it's approaching close to 18 times revenue again. They report in a couple weeks. It's one of these names that will probably levitate into earnings, and it's going to have to prove itself. When I say levitate, 197 was sort of a breakdown level a couple years ago. But Oracle, on the other hand, reasonable valuation, which is within a whisper of its all-time high. I mean, that's a stock you could actually sort of wrap your arms around in terms of valuation, in terms of what they're doing. If you recall, Mel, which you do, Oracle was one of the O's, the only O, in my Hope trade way back when. It is acquitted
Not
itself
Dawn?
extraordinarily well.
Not Dawn?
Dawn was a different one.
Dawn has
it was
no
Hope,
O in
Dawn.
it.
Oh, yeah.
I mean, unless you spell it sort of fugazi, I don't know.
We are so distracted tonight.
Sorry about that.
Sorry.
Getting back to this rally, because it does seem like there's a churn, at least even within the tech sector, into some of the more sort of value pockets, if you want to call it that.
Well, and then there's also the high multiple ones like a CrowdStrike and a Snowflake and a Datadog. And what we've learned out of the AI hype that's hung over the industry, and the question first, the first question was this going to trigger some kind of an AI capex spend within mega cap tech? And is that a reason to go buy it? And I think we're getting some follow through on that. If you're going to follow through on AI spend, if there's always room for AI spend, maybe at the expense of CPU or people like Intel, there's also room for cyber. There's also room for some of these high-end software names. That's what this has told me, and that's what we're seeing on the follow through here. So, and Guy's Adobe. I mean, you look at a couple of these names, and it is Guy's Adobe because he's often talking about a company that he's often right about is usually trading at a higher multiple, and it continues to re-rate. If you look at the other parts of the market, though, look at energy coming back. Look at in other words, so the parts of the market that are the other side of the growth barbell, you're actually seeing commodities come back. You're actually seeing some of these industrial names that involve some cyclicality. And then the media rally today, I don't know that you think media's fortunes have changed overnight, but listening to Facebook, listening to Google, we're getting an understanding about what's going on with ad spending. It all leads up to that recession in name only is what it is now. I just think it's pushing it all out. That's what everybody's now doing. I think there's still a big cry for recession. It's now at the second half of 24 instead of the first half of 24. And that's what's going on for the market.
Julie, how do you feel about this rally, seeing the broadening that we've seen in recent weeks and months, but also the churn within the tech sector?
Yeah, I think the broadening is important and it is a positive indication. But at the end of the day, the things that, we pay the most attention to are still the fundamentals, and they're uneven, right? You see in high quality software, you still see that deal cycles, sales cycles are pretty long. There's still hesitation. And I think that until that gets resolved, it's hard to get super enthusiastic because that's, at the end of the day, the fundamentals really do have to matter. And so what I worry about is, when we get Snowflake trading at, 20 times revenue, it starts to just be narrative. And eventually narrative has to be backed up with fundamentals. So I'm a little concerned here.